Welcome everyone. Thanks so much for coming tonight. I know there's a lot of events apparently happening in town, but we do have a star-studded panel, and we've also got John Gotts here who's beamed in via Skype. So I think it's going to be an incredibly interesting conversation. Now I wanted to introduce Colleen, who is actually hosting the drinks tonight, and she's from Shepherd Mellon. She's got a few words to say.
Hi, just wanted to welcome you all and welcome the panel, distinguished as they are. I am a partner here in San Francisco. We host these events with PIMO and really enjoy having you all come here when we can get these scheduled. I work in the securitization and capital markets areas, the finance group here. So what these guys are going to talk about tonight is certainly something that we're getting more and more inquiries about in terms of clients, talking about getting into the capital markets. And also I think it's just a really fascinating area and a great application for blockchain. So without further ado, welcome and turn it over.
Thanks, Colleen. So I'm going to pass it over to John Boitnett, who's the moderator for tonight. And he's going to introduce the panelists, or let them introduce themselves. So over to you, John. Thank you.
Do we need this? Okay,
yeah,
we do need this.
Please, for the
and
video.
This is for you. Okay, so should I use this?
Hand that one over to this handsome fella. There we go.
All right, great. Hey, I'm John Boitnott. I am a longtime journalist at some different publications, Inc., Entrepreneur, Business Insider. I also help out companies with their content, their blog posts, their website content. So feel free to ask me more about that later if you like. Anyway, you got the panel here. I'll just start with you, Blake, and you guys can just sort of go down the line there, and also we'll get to you, John. Hi, John. How you doing? How's Idaho? Actually, let's start with John. Let's start with John because he's on Skype tonight. So yeah, just for 20 seconds, tell us about yourself, John.
Okay, so I'm 52. I've been starting companies since I was 7 years old. I was in the family office space for a little while. I got interested in smart contracts when I read Nick Szabo's work about 5 years ago. Realized that there was a place for digital trading of tokens, and I've been in it for about 25,000 hours now.
Awesome. That must mean that you're an expert of some kind. Okay, that's great. All right, Blake, your turn.
After 10,000.
So I haven't quite measured my career in hours, but probably nowhere near that. My name is Blake Richmond. I'm the head trader and portfolio manager at Middle Block Capital. We're a diversified distributed ledger technology investment fund. Part of it's actively managed and part of it's long-term investments in the smart contract platform space and looking very heavily at the security token and tokenized asset space as well.
Great. So I'm Jamie Finn. I'm with a company called Securitize. We do primary issuance of securities and then do lifecycle management of those securities in a way that's compliant on the blockchain over time. We have about 17 customers at the moment with offerings live all over the world. And I guess I've been in this business long enough to remember when I was really surprised that Ethereum got to 200. And I guess now we're really surprised the other way.
Greg, hey, I'm Mihao, and I'm the president and co-founder of Room Wallet. We're a hardware and software wallet platform that does useful things in the wallet besides just move coins from one point of a blockchain to another. So like our wallet will let you trade. It'll work with Securitized type platforms, and it'll exchange dollars for cryptocurrency. It'll move coins between blockchains. It'll do ICOs, utility coins, all that, like right off the wallet. So that's kind of like my main focus. And I've been hacking since I was 15, and I've worked for 8 years inside the Beltway as both a private and public sector white and black hat hacker. So that's me.
So my name is Mason. I'm the CEO of a company called Tokenized. We help startups, enterprises, and funds launch compliant ICOs, whether it's just with regulations here in the US or in various countries around the world. We help them get through the entire issuance process. Some of our biggest clients are Hashgraph at the Tezos Foundation.
Awesome. Okay, great. Mason, let's start out with you. For those people in the audience who are somewhat new or newer to this end of the space, tokenized assets, what are they? Why would people be interested in tokenizing assets?
Yeah, so I think let's maybe start like a little historically. When Ethereum launched, they essentially crowdfunded their development. And what they did was they took in Bitcoin from people on the internet, and what they gave them back was a token called Ethereum, or a coin, if you will, or a cryptocurrency. And this cryptocurrency was to be used on their platform and used to basically access the computational power on their network. So essentially they took in money, they promised to build something, and they gave a coin in return that gave the people access to that thing that they were building. And so this sort of matured to the point where it became really popular. There were lots of startups going this route. And about a couple years in, we learned that doing this falls under securities regulations. So companies started launching these as securities offerings. From there, people said, oh, well, you could technically do this for a slice of a fund, a slice of the LP interest in a fund. You could do it for a slice of art. And so you could take money in and give people a token. Let's say you run a fund, give people a token that represents a slice of your fund, and they would have the same rights that any LPs would have. And so people are experimenting more and more with this, whether it's with funds, arts, or collectible cars. And so that's sort of the concept of a security token offering.
And Michal, it's good to you. What are some of the advantages that haven't been mentioned so far of tokenized assets? Can you use them at Burning Man? Are they? Do you see them someday being used at Burning Man?
Well, I was at the Brock Pierce talk where he talked about what his strategy was, a vision he had for tokenizing the Burning Man organization, which was actually a good use case for how you would use tokenization, right? Because the advantage of tokenization is that whatever digital manipulation you can do with a token now, or you can imagine, you can do with your security token or utility token or payment token, right? So basically, like, you know, if the function of Burning Man is that you want to give all the camps, you know, some budgetary access so they can make their camp more awesome every year, and you want that on the blockchain, you could code all that up and then you'd receive their, you know, Burning Man dividend payment on the blockchain, right? So it's really transparent, secure, I mean, or it can be transparent depending on how you implement it. But that's the advantage, is that basically any financial functionality that you can dream up, if it's logical, you can probably do it on the blockchain, right? Or some combination of on-chain, off-chain crypto functionality. So that's the advantage of it.
All right. Hey, John, over there in Idaho, what are I know you probably have an idea about some other advantages that haven't been mentioned. What would you say?
Well, I mean, I think first of all, everyone has to understand that for the last 4 years, there's been a ton of obfuscation. And this idea that there's some utility token, that some new asset class is absolute crap. That does not exist. Just like the SAP has been proven to be a Frankenstein, it doesn't work either. I think that if I wanted to tell anybody about what you should look at for the future of this space, it would be that everything is either a security or it's a commodity. And everything's already covered by the SEC and CFTC and FINRA, FinCEN too if you're doing money transfer. So the idea that if something quacks like a duck, in other words, it pays a dividend like Dash pays with their Masternode, even if it wasn't a security, it's now a security. If it is taking in money from people to go out and create something of value, that's a security. And that's all right. I mean, people have been fighting this in foundations in Switzerland and Malta and all this other crap, and it's just crap. What they're doing is out of this game, and they're getting around laws that protect investors. So I'm really actually very excited that people are finally understanding that the true value of a security token is to be able to take any asset, whether it's, you know, praying donkeys in New Mexico pumping out, you know, barrels of oil every day, or whether it's a high-rise in Manhattan, you could fractionalize the ownership and you could give it out. And you could give it out to accredited investors and let them trade it, as I said. But with Reg A Plus Title 4 Tier 2, you can also, through the Jajah, give out to the public and let them trade on peer-to-peer exchanges without any oversight or regulation from the SEC getting in the way, as long as they follow specific rules like no broker-dealer activity or money market. Now, when you take that and apply it also to commodities, it's incredible also. But you're talking now about true cryptocurrency, or you're talking about a coupon, or you're talking about some kind of digital commodity. But now that can be sold directly to the widows and orphans today. It can be sold and traded on peer-to-peer exchanges in the United States to U.S. investors today. And now this is pretty incredible because now imagine that you can create a treasury of cryptocurrency, like one of our companies that we're
John, let's go for 20 more seconds. Sorry. Just go for another 20 seconds. Sorry.
Well, it's just that. I mean, if you have a cryptocurrency, you can use it rather than your investors' money or revenue to pay a team if they're willing to take those, and if there's a willing market willing to buy those. I'm working with Arloop, which is one of the Hyperloop team. We want to raise them some money to do test track, but we also want to cover 3 years of 1,200 volunteer engineers that have been earning these Arloop coins and the DPoS system on the ELS cloud that they're going to put underneath it. So if you can imagine starting a company and you raise $100 million, that won't cover their bill. They have 1,200 engineers earning $8,000 a month. That's $100 million a year. But what if you could pay them in cryptocurrency? And what is actually tradable today? Then you've taken that off the balance sheet. So as long as people understand there are securities and commodities. And last thing, the only thing that's missing on commodities is the Reg A plus background check for fraud, securities violations on the marketers, issuers, and creators of those securities. They don't have that for commodities, but I've suggested to the CFTC and SEC, and they've read my work, and I hope they'll change it.
Okay, great. Thanks, John. All right, so definitely some advantages there. Sounds like we're pretty bullish on it. It seems like it's not too theoretical. Seems like it's sort of a good investment. Would you agree that it's a good investment? I know it's very theoretical.
I'm not giving out investment advice.
Yeah.
I would say I had personally invested in a number of STOs, and I've invested in a number of ICOs. I at least know what I got when I invested in an STO. With the ICOs, there's an example of one at the moment that really has no exit, and it's sort of watching a downward spiral you know is not going to work out. And so these businesses, if you're doing something real and it has real value, then security could be a good model for you.
What are some of the disadvantages to tokenized assets, do you think, Blake?
One is just introducing the market risk to traditionally illiquid assets. I think a lot of markets that are made up of these types of assets probably have some sort of inflated valuation that, just given the lack of liquidity in the market, you just don't have an accurate spot for it. So I think that's more of a systemic risk, but probably something that needs to come out of the system anyways. Ongoing compliance, probably another one. You have very clear established guidelines for other public market assets, so that's going to need to be figured out. Another challenge would be the kind of point of entry failure, as I like to call it, and that's like if you're trying to ensure the integrity of your supply chain and you're slapping a QR code on your GMO melons, what if it's not a GMO melon? So I feel like if you have a market for art or a market for fractionalized ownership of larger assets, real estate, there needs to be some kind of point of entry control, some sort of listing standards, and those haven't, really been introduced or talked about much.
Okay, so let's go back around to you, Mason. Let's talk about what needs to change in order for this to catch on in a more mainstream way. I'm sure there's a lot of different things that all of you guys could say, but when will it be easy to use? What will it take for it to be easier to access and use?
Yeah, I think the fun part about this is none of the infrastructure to support security tokens really exists, especially in exchange. And so it's still fairly young in the world of security tokens. I think there's 4 regulated exchanges in the US and 2 are live and none have liquidity. And so the market's still really, really young. So I think for this to become a little bit more mainstream, I think it's probably going to take another 3 to 5 years before these markets actually mature and it becomes more of a reality. But I think we're really, really early in the life cycle of security tokens still.
All right, Mihao, your turn. What's
This is like the gimme question to a wallet maker.
Yeah.
I mean, the problem now is grandma can't use a regular Trezor, so how is she gonna navigate negotiating sending a security token via Trezor, right? It's just not gonna happen because you gotta generate a receiving address, you gotta understand all this stuff. So what I'm focused on is as fast as possible solving the fundamental infrastructure problem of wallets being usable, right? So making a wallet that's both a software and a hardware wallet, whichever you prefer, that will trade securities as long as there's a blockchain behind it enforcing those rules, which is why I talked to you a bunch. Yeah. But pretty much, I think to me, the big block is like, right now, the people in this room probably all know hardware wallets, they know how to send Bitcoin, but outside of this room, it's not a lot of that happening, right? So we're not even at a place yet where like cryptocurrencies are used every day. Like you don't walk to the gas station and be like, yo, I want to pay with Bitcoin for this gas. And until that happens, that's when we can start talking about security stuff. So I completely agree with you that it's a good ways away, right? And for people that are like in the know, yeah, it's a terrific way of creating liquidity in private equity, for example, right? Because you can trade it after Rule 144 expires, and theoretically, we're going to have a bunch of exchanges that allow that to happen. So that's my take on it. It's like we got a lot of work to do, right? And I'm glad I'm doing a lot of it, hopefully.
Yeah, I mean, I would just add that, for me, the fundamental piece is there's no institutional capital going into this market whatsoever because there's no regulated custodians, right? So nobody can hold these tokens except for a very specific wallet. And is, Fidelity really going to do that? I don't know. But it would seem to me that you need some sort of regulated custodian on the crypto asset side to appear. And there's been announcements about it, but it has to be a name brand. It has to be somebody that people trust automatically. It's not going to be an upstart, unfortunately, in this space, I don't believe.
And Johnny G up there in Idaho, you were nodding to that as well. Do you have anything you'd like to add?
No, I mean, that's correct. I mean, I think the sooner that everybody just gets back to traditional investment with understanding that you can now have liquidity, it's not a zebra, guys. It's a horse.
That was Moses.
Yeah. Your thoughts, Blake?
But you're not going to be able to put up these crap coins anymore. You got to understand that, 12 coins may hold 80% of all of the value in crypto today. 12 coins. The other thousands of coins representing the 20% are literally crap. They don't have teams. They don't have business models. They have no path to profitability. And they would never get funded in Silicon Valley in a million years. So when the smart money starts investing, as he said, the institutional money hasn't come in. Well, of course it hasn't, because everything out there is crap. As soon as you start having P&Ls and performas and people that actually have a path to profitability or have it already, then you're just liquidating or making liquid what has traditionally been illiquid, but you're not changing anything. We got to quit this idea that crap coins that are going to feed the world are somehow going to be worth trillions of dollars. They're just not, and that bubble is broke.
Got it. Any thoughts on the same subject, Blake?
Which?
On just what he's talking about. Zebra, it's not a zebra, it's a horse.
Well, I would think you'd know the problems, right? Because you're trading this stuff.
Yeah, I thought I addressed that.
Okay. All right, good.
I think I have a nice counterexample to this. You mentioned that most of the coins out there, they don't have teams, or they have teams that would never be funded in a million years. I think you could have said the same probably about Satoshi, but definitely the Ethereum team. They were sort of a group of not your traditional developers that you would find in Silicon Valley, and so that's sort of an interesting, I think, counterpoint to keep in mind.
And the other thing I like to add is I don't think utility coin's dead. Like I think there's a million ecosystems that could still use their own currency. And I think I agree that most of the stuff that came out is crap. But like in game worlds, you want World of Warcraft Gold to be on the blockchain, right? Like in that universe, like those users would love that. So there is still a lot of use cases for the shitcoin that's just shiny.
Just 1 second. All right, go ahead, John.
Yeah, so look at Mobile Go, okay? A French Sergei Shalom created $53 million worth of Mobile Go coins so that they could be used to trade magic swords or gamble online. Sure. Now, that is essentially a cryptocurrency. It's utility, if you want to say it has utility, but I think that you guys need to understand that, my partner is a retired SEC commissioner. Okay, all of my lawyers are retired DOJ, SEC, CFTC at the highest level, like policy making, okay, not enforcement. And I can tell you right now that all of these people that came before Congress and said that, or the SEC and said that they were too stupid to understand this new asset class. Well, they're the same people that if you put Switzerland on your application for a Reg A+, they're going to raise an eyebrow at you. The same thing as you call a utility. Now, if you make something with Ethereum, for instance, to your point, become something that is so valuable that so many people are using it and plugged into it that it truly becomes utility like Google or like electricity or your phone, That's a true utility. But to say something's a utility, first of all, is going to throw up a red flag for the SEC if you plan on getting any U.S. investment. And number two, it's just a bad word. It doesn't make sense. There are cryptocurrencies, there's coupons, and there are digital commodities, but there's no such thing as a utility coin, and they're not getting funded.
Great. Yeah, you may.
I think we're actually talking about the same thing. I think you're using the word, I said utility, and the stuff you described is how I envision doing utility. That's like a fully compliant utility. So, like I would file it like an offshore utility under Reg S, Rule 144, the tokens can't come into USA for a year, right? So whatever you call it, the name game is kind of difficult, but I actually agree with you, right? So maybe utility is not the best word.
It's commodity. And I think if everybody gets that language down, it's either security or commodity, we can move forward faster. We can just get rid of the obfuscation. There is no new asset class. And literally the only hole in this right now is that I can create a cryptocurrency with an ERC20 coin right now, and if people are willing to buy it, I can sell it. There's no background check on me. There's no background check on my business or my team or anything. And that's something that if you're going to allow things sold to Joe and Josephine public, especially here in the U.S., widows and orphans, you have to do background checks. As soon as we all agree there are securities and commodities and they both need the same background checks to protect investors, we'll move forward.
Great. A further response?
Just that, that's just premised on the fact we agree that government's good and more regulation is awesome, which a lot of people would disagree with as the origination of blockchain. But if you're in on the government side of it, me being on both sides of it, it's a really curious place to be. But I completely agree with you, given that assumption that government regulation is good is true.
Okay, got it. Any other regulatory challenges that you guys haven't mentioned that are important that you
I think we just touched on the digital identity problem. Right now in the economic infrastructure, it's very easy to do the KYC AML. It's very easy to just go to the bank, give them your information. But when you remove all of that standard federal government identity and you democratize access to capital markets like this, you really need a robust digital identity solution. And that just doesn't quite exist today.
Actually,
Are we talking about Civic now?
No. BIP 47 already does all that. So we're actually writing wallets that support BIP 47 and allow for digital signing and KYC AML to be really easy on both the wallet and the issuer side. So,
Fantastic.
and so you know why that's cool? There's one real feature of it. So BIP 47 is an identity protocol that basically means that if I give my identity to somebody else and they send me money, I don't need to send them receiving addresses. So that's one thing. But when they do send me money, the protocol guarantees that only my private keys that also sign the identity can get to that money. No one else can. So what you can't do is KYC AML and then say, hey, actually my refund address is this address of this Russian hacker or whoever else, right? Because right now anybody can just give any receiving address to anybody else after they've gone through everything, and there's no guarantee at all that receiving address actually belongs to the person that gave it. That typed it in or cut and pasted. It could be anybody. It could be, I'm actually sending money to my uncle. I just don't want the IRS to know, right? So we solved that problem. But I can talk about that for 20 minutes, so I'm gonna stop.
Okay, guys. So 1 year from now, what's changed? What does the market for tokenized assets look like? Is it easier for grandma to invest? How does it look? I'd like to tackle that one.
I think we'll have a bunch of marketplaces where you'll be able to trade these things. They're not exchanges, they're marketplaces, and there'll be some limited liquidity. You'll probably have, 50 plus companies, tokens that are out there that are tradable. And, we'll see if this thing can actually work. Dividends will be paid, people will be receiving their money. It should be a really interesting time to hear from that.
Any other thoughts on that?
Yeah, I think it develops slowly. I think every institutional investor is excited about the space, but until you have real success stories or a reason to climb up the risk curve, nobody's going to really take it seriously. From what we have seen of liquid security tokens, they typically trade below NAV. They typically have heightened volatility. So until there's a real reason, and talk to other fund managers that run tokenized funds, and it's a great capital raising mechanism. It's a great kind of new hip thing, but it is really a reason to expose yourself to that type of market risk and financing risk.
Yeah, so I think we're seeing larger financial institutions play in this space. So we saw the CME Group launch their swaps, or their it wasn't swaps, it was swaps. They launched something. It's a Bitcoin product, and we saw Nasdaq launch an exchange for cryptocurrency specifically. They also spun out Shares Post, which is looking at crypto as well. And I think what I'm most excited about is sort of more established name brands entering the space, especially now that the infrastructure is slightly more mature than it was before when they started looking at it in 2014. And we're seeing, I think Monster.com announced that they're doing a STO, the cable company, not the drink company. And I think that more and more institutions are starting to get comfortable with it, especially now that there's regulations and there's some sort of precedence for how to regulate either the trading of Bitcoin, the movement of Bitcoin, or the security token offering itself. So I think that's what I'm most excited about.
Okay, great. John, I had a question that I know that you were interested in answering. It's about what do you think is going to happen to the exchanges that are currently listing potentially illegal unregistered securities and charging trading fees without being broker-dealers?
I think they're going to get shut down. I think that one of the biggest problems right now with Ethereum, and I wrote something you can find on LinkedIn called "Will You Survive the Upcoming ERC20 Crash?" And I wrote it on June 4th when Ethereum had already fallen about 70% to 600, and we sit now at 180 or 175 or whatever. Look, Ethereum's real magic was that they created an illegal ICO with the ability for anyone to create an illegal ICO. And they allowed these coins then to trade out onto Bittrex and Kraken and Telefònica and all these places. But because they failed Howey, there are unregistered securities. And so I think that if the SEC wanted to make an enforcement action, that'd be the fastest way to do it. It's actually what I've suggested to them, is that they don't go play whack-a-mole with the coin. Just go out and take down Bittrex for all the unregistered securities on it, and you'll have crushed the entire legal coin market. Now, I believe that's where we're heading. I think that's possibly why Golden didn't open their crypto desk. And I happen to be aware of some major actions that are going to happen potentially happen against the biggest coins, some of the biggest coins in the space, from the Ethereum crew, actually, and the founders of that. When this happens, I could easily see Ethereum going back to like $14 or something, but that's not the question. What about exchanges? Look, exchanges right now could be compliant. Under the Jobs Act, they could allow commodity coins that are not securities to be trading right now with widows and orphans. Understand that 26% of U.S. investors polled recently said that they are interested in crypto, but they're afraid of it. Actually, 3% of U.S. investors are in it. So I think there's a massive opportunity for the first exchanges that come along and offer a free peer-to-peer exchange that allows for commodities. As to the security tokens, there aren't any out there right now that are legal. And here's the thing. Before, when I'm talking about saving the world and the rainforest and all that, everyone can get really excited about the upside because there's nothing there. There's nothing under it. But when you have to pull out a pro forma or a P&L and prove your worth, and it's suddenly based on Benjamin Graham and fair value and P ratios to growth rate, when we get there in a year or so, it's going to be a beautiful market, but it's not going to be a runaway. People aren't going to get it 1,000x returns in a year because they actually have to have something really there, demonstrable. And that comes back to traditional Silicon Valley.
Okay,
So
John.
that's it. Clean it up and it'll be great.
All right, great. What are your thoughts?
Well, to be honest, I'm a little lost.
Yeah.
I got lost in the question. I mean, it just seems to me that you know, I think this market is evolving much more quickly than people are anticipating, and we're seeing kind of businesses appear and look to finance things in different ways because the existing mechanisms aren't there. You know, we've seen a fund, a debt fund, like these guys have been around for 25 years, slice off a third of their fund is their 8th fund that they're doing. Every time it's returned better than 20%. They're slicing off a chunk of it and they're going to tokenize it. Why are they going to do that? Because going to the SBI is giving them too many limitations to take money from them, and so they want to go to a different market, and they think they can raise the capital. Who knows if they can, but at the very least you're having companies with real track records looking at this as an alternate finance mechanism. Mason, you know, spoke about Monster, and there's numerous other companies. I mean, most of the businesses we see are, Series B and on mature operating companies. We have done some venture funds, and I would beg to differ. There are some legal STOs, but I understand you're pontificating on that point. I do think that there are some options that are out there.
Exchanges?
No, there's no exchanges right now for security tokens. The only that's a whole different issue.
Just ATSs.
Just AT. Well, they're marketplaces. They're not
Open
exchanges.
finance.
Yeah. Exactly.
I want to skip the peer-to-peer exchange. I just want the wallet to go peer-to-peer and trade.
Yeah.
So that's my.
Well, but I think that's an
regulate
interesting.
that.
No, but I think it's an interesting point. Why is it that I have to work through a centralized exchange
Correct.
when it comes to a security token? Why can't I work through a decentralized exchange where I have, as an investor, I hold the securities, I decide when I want to trade them, and I trade them.
That's right.
It's a better experience.
Right. So actually, we support, in the Rune side, the wallet side, we support peer-to-peer atomic swap, we support decentralized exchanges, we support centralized exchanges. We just want to give users the choice, right? And then it's up to the issuer to make sure their stuff's compliant, right? So whether they're doing a commodity security, whatever you want to call it, it's up to the issuer. It's always with the issuer to make sure it's compliant. That's where the buck pretty much stops. So really, you're going to continue to see shitcoin when you got shit issuers, but it doesn't mean that you have, everything is bad, right? It's just, are they good issuers? Are they following the rules? Do they have the tech to follow the rules? Are we doing our jobs, giving them the tech? That to me is the critical question. And when that happens, then you're going to have a raging party again.
Any thoughts from anyone else?
Yeah, I think it just highlights the importance to kind of distinguish the tokenized assets, real assets, established valuation mechanisms, established compliance paradigms, versus the ICO, utility token, unregistered security, what have you.
John, thoughts?
I think that what's going to really propel this space is you have to get an experience closer to Charles Schwab. I don't know if you can do that with your wallet. Your wallet sounds great, by the way. What I'm thinking is, when I want to get money into Charles Schwab, I don't have to buy some General Electric in order to get my money there. So in other words, to buy Bitcoin or Litecoin or something to get on an exchange is going to be strange to a retail investor. Again, when I go to the exchange and I'm in there, and now let's say that I have Tether in my wallet representing that. Okay, fine. But now when I look at the trading pairs and I see Bitcoin to Litecoin and Ethereum to this, that's the equivalent of saying General Electric to Tesla. And yeah, Goldman filed a patent a couple of years ago that maybe something like that will occur someday. But right now, when the experience for a novice is nearly impossible, you don't know how to get your money in. If you send it to Poloniex or Kraken, it might be 30 to 60 days before someone responds to you to tell you where your money got lost or got found. Horrible experiences there. Once you're in there, you don't know how to trade, and especially if it's matched one to another and this one starts dropping, you get confused. The future is going to be you ACH your money in there, you have trading pairs just like a Charles Schwab to the coins from your fiat currency localized, and when you want your money back out, just like a premium account, like a Charles Schwab account or something, you could spend 50% on a debit card margin of your total equity. Well, it won't be that, but it'll be, for instance, we're working with a bunch of exchanges, and the idea is that we, with a prepaid debit card provider, who also has an account of that exchange, simply through API looks into that account, sees there's enough money, transfers that into their account, lets them spend it in debit. And that, by the way, could be used if you wanted to put your money back into a bank. This is just one example. But what I'm saying is that when you get to the point where a Charles Schwab account or a crypto account is almost impossible to tell the difference in how you activate the account and how you run the account, that's when we're going to get that 26%. But as long as you send your money in to buy something and then you trade it, you don't understand, it's just too scary.
So the exchanges we're working with, these marketplaces, I should say, are not doing anything with crypto. In fact, they can't do it. So all the trading pairs are USD. So it's you send in cash from your bank account, and then you can trade it. These are not theoretical things. You can go on Open Finance right now. You can go on Shares Post and see what they're doing. None of them are doing crypto trading pairs. I think crypto trading pairs are super confusing and a very long way off, for the exact reasons you're outlining.
Great. Over the next,
You gotta make it simple.
Just to answer his question, the wallet does do all that. The whole use case is laid out. Yeah, we do that. But we'll talk about that
You're
later.
such a good salesman. I actually didn't ask you.
They'll be out front.
So there, obviously, over the next several months and years, there's going to be amateur investors who are getting interested in this. What's some advice? What are some general tips that you would give them in approaching all of this?
Hang in there. No, I mean, read everything.
Stick with it.
Absolutely. Definitely start with technical white papers and read them religiously. Are we talking security space or security token space or just general crypto?
Either, actually.
Yeah, I mean, definitely find a good network of people that you can talk about ideas with. Read absolutely everything you can, and find projects that are meaningful to you and stick with them. Get to know the project teams, get to know the community members or community managers. Look at the project milestone chart, check in, see if they're actually consistently doing developer updates, and that's what's great about this space is it's so democratized and I guess decentralized that every project is really looking for people to help out, and it's great when you can find like a group of people that are interested in the same, solving the same problem, the same kind of coin ecosystem that you are, and it's actually very easy to get involved. People who are very hungry for it.
Any other investor warnings?
Well, I mean, I invest in all sorts of different things, right? And so I always kind of look at the deals, even the deals we see is this something that I would invest in? And I have a bunch of my own criteria. And everybody should have their own criteria and understand their own risk profile and what they want to do with it. But I mean, at the end of the day, you're making an investment, you're expecting some sort of return, be it, being part of the community or some sort of economic return. You should figure that out and understand if that's even plausible. There's some things that have been sold that the returns are totally implausible. Not if every human on the planet ever used the product would it work.
Totally agree that investment decisions should have nothing to do with the thing being tokenized at all.
It's just a good deal.
Yeah, I think investment in security tokens is like investing in anything else. First, you have to educate yourself on the products. What's the landscape like? What is it actually that you're buying? You start small, maybe with less than $100, something you're okay losing, and you start your journey there. But it's no different than investing in anything else. You should always know what you're buying and what the risks are.
What are some of the blockchains you can tokenize onto? Why would you pick a certain one over another? What are the advantages of one that you can tokenize onto as opposed to another?
Speed and money.
Yeah, throughput and stability.
Yeah, explain.
I mean, if you're planning for a high traffic, high capital markets infrastructure like this space is probably going to need to require, you're definitely going to need to look at speed and scalability features, and that's a big challenge these days.
Yeah, I mean it's I mean Ethereum's not going to work right now.
Absolutely.
I mean, you look at we had a customer come to us and they reputable, want to do a Reg A, they've got everything approved, they got 10 years operating history, know what they're doing. They want to have millions of people doing millions of transactions every day. We couldn't, how do you architect that so that it works on Ethereum today? It's not going to happen. So, and there's other options like Stellar, which is maybe potentially interesting, things like that. But at the moment, that's it's a two-sided problem because you have infrastructure from the investor and or consumer side, but also then on the trading side, and then you have the infrastructure of the actual blockchain. So these are multi-part problems. You're not going to solve overnight.
Actually,
It's in the wallet.
it's not in the wallet. It's an open transaction.
Wow.
Which is the other part of the wallet. But anyway, sorry, I'm gonna just give a generic answer.
Just buy the wallet, guys.
No plug at all. So the way we solve big scalability problems like that is basically taking the really high volume transactions offline and then writing them to the blockchain.
Right, but you're shifting the problem to then every person having to have your product.
Well, yeah, I mean that's the plan.
different.
But
Just because in the world uses the exact same thing to work out fines.
well,
It's not really.
well, it's fair point. But our stuff is open, and other people can adopt it, right? And the way to answer the question about which blockchain, I'm gonna just get with my co-founder Chris Odom, who, you know, if he was here, he'd be talking even louder about Bitcoin Cash. Because no smart contracts, we can tokenize on that, and then we can have the issuer enforce the security stuff, right? So now it's getting like kind of religious, but yeah, I don't like Ethereum much at all. But the world's only working like security thing is on Ethereum right now. It's right now. If you want it today, it's right here.
Well, and there.
But Bitcoin Cash can do it. We're working on that solution, and that's very imminent. So.
But John has raised his hand, so he's been a good member of the class, so he should speak now. Go ahead.
Yeah, so it's interesting, right? So all of these first coins that came out, everybody was all blockchain, and it had to be blockchain based, and people got excited about it. And it's sort of like back at the turn of the 19th century, or 20th century rather, when there were 350 auto manufacturers, and then it became the big four. It's going to happen again. Most of these coins that come out in the future don't have to be blockchain related at all, especially if they're security tokens. But your question was technology. If you are going to invest in blockchain or put blockchain technology underneath you, you have to understand that Ethereum is completely broken. It doesn't scale and it's expensive. Bitcoin in the same way, meaning that the bigger that it gets with proof of work is that the bigger that it gets, the more people that are plugged in, the more losers you have, right? Because there can only be one winner. Bitcoin is essentially a reward given out to people that plug their computers into a centralized network, sort of like BitTorrent 12 years earlier, right? But their reward was getting free media. So here you get this reward, but this reward is given to one person, which means everyone else that loses, that's expensive. And the bigger the crowd that loses, the more expensive it becomes to get one, the less it's a scalable thing. But also, the difficulty of the riddle that has to be solved to earn that reward gets more and more and more difficult. And as the difficulty goes up, it takes longer. So what you end up with for a transaction is something that is expensive and slow. The reason that I really like EOS, although I don't like the Constitution and Block 1 and everything, and I think they scammed people out of about 3 of the 4 billion, I don't think they raised it, all sorts of problems. But their software is brilliant because Dan Larimer, who did BitShare, Steemit, and then EOS, figured out that if instead you have a group of delegates with hardware that you trust, and all they're doing to spend electricity is validate a transaction, someone else validates it, you move on. That's fast, and that's really inexpensive, and everyone shares the block reward. They're not competing. That's why I've heard EOS can do 4 million transactions in a second, and Ethereum can't get to 100,000. So I think the battle's already over, and EOS and their delegated proof of stake wins. Now going forward, we have the blockchain security tokens plan. That was a race, and I think EOS won.
If you're looking to do an issuance, you can either make your own blockchain, so you can make your own coin with your own underlying infrastructure, or you can find another blockchain out there that enables the creation of those coins. And so Ethereum was the first blockchain, well, it wasn't the first blockchain. So Mastercoin was the first blockchain that enabled creation of coins. You could have also done Bitcoin colored coins, which sort of didn't take off. But Ethereum was the first one that took off, that allowed the creation of other coins on top of it. And today it's the best tested and most widespread blockchain for issuing your own coins. So it's the most mature out there. There's other blockchains that enable the creation of coins via smart contracts. So you can also issue your own coin on Ethereum Classic. You can do it on Stellar. There's a blockchain called Zilliqa which enables the same thing. And in sort of like picking where you want to launch your coin, one question you may want to ask is how widely integrated is the infrastructure? So right now, Ethereum is readily available in almost every major exchange out there. There's lots of wallets and lots of software support for it. With things like Stellar or EOS, they're still younger for the creation of coins, and so there's not as much infrastructure. Most exchanges don't know how to integrate with them. And those are considerations I would take into mind.
Any thoughts from anyone else before?
Yeah, just real quick, the last 2 points. So my goal in life is to make the tokens all movable between blockchains. So we already have this working between Ethereum and Bitcoin Cash. So, and then we're going to keep adding more and more support for that, for just arbitrary tokens, because some chain may have a huge issue, right? That you want to just move your money off that chain or your token off that chain, have it go elsewhere. So to me, it's like all these things are very real issues that the panel's talking about.
Does your wallet have a coin by chance?
You should have an infomercial for this wallet.
The wallet does not have a coin because we're not a scamming.
My wallet. Get my pillow. My wallet.
It's just got really awesome functionality. So,
Buy my wallet. Anyway,
no coin. There's no coin page. Sorry.
All right, we're gonna take it to the audience here. What are some questions that you guys have? Feel free to raise your hand. All right, go ahead.
So my question is more about security tokens representing equity in private companies. Back in the days, private companies had paper securities or paper certificates, and then we shifted to digital shares or digital certificates with companies like Carta or Capture and others. So now securitizing those shares, what true value does this bring to the company and to the investors and private companies? How does it make it more liquid?
I think it's the same fundamentals that sort of just enabled the whole ICO craze. One is you can theoretically legally crowdfund globally, so you have global accessibility. The other is there's a shared infrastructure layer between all these exchanges, and you can automate a lot of the requirements in terms of transfer restrictions directly into the smart contracts. And just by means of having a shared infrastructure layer, there's a lot you can do. And I think it's still early, so we don't know like what all the potentials are there, but the fundamentals of it are definitely very interesting.
Anyone else like to take that?
Liquidity for employees.
Liquidity for employees. That's John's answer.
Well, with the SEC rules and regulations, it's still governing all these tokens because they're security tokens. So how really does it make it more liquid for employees?
Makes it more liquid for employees once it hits an exchange. Sorry, I thought that was me because I made the statement. I believe that these security tokens, if they do a Reg A plus, and not just an accredited Reg D, but a public offering, then those coins can start trading on an exchange as quickly as they can get approved by the SEC. So, for instance, if you had a going company right now, 5 years old, 50 million in revenue, you're the real thing, you'd go public on the NASDAQ or something to give liquidity to your employees. But if you did a Reg A plus, which is sort of a mini public offering and got on these legal peer-to-peer exchanges, then in fact, in a short period of time, your startup could actually offer liquidity to those people in there that are earning options.
Yeah, so that's exactly right. It basically gives you an extra option that didn't exist before. Before, as a private equity holder, you had to wait till the company got bought or IPO, which are both like things you might wait 8, 10 years for. Whereas now you can do it, as soon as it's available on an exchange or it's swappable in some way. The way we implement that is we just have convertible notes to tokenized equity, right? We just want to, and when we do actually, when an investor exercises that option to tokenize, then we just got to make sure that whatever's in their paperwork is actually enforced on that blockchain wallet combination.
Yeah, one other thing on that is for companies that are very sensitive to pollution, it offers another way, another kind of avenue to capitalize or to compensate employees.
Yeah, I had a good case study I can send you on all the benefits of it, every piece and how to do it.
John G, what were you going to say?
Also acquisitions, yeah. And again, this isn't security tokens. This is back to that cryptocurrency. Jed McCaleb is one of my heroes. I think that he had Stellar, he did Gox before, got stupid, he got Ripple, he did this. And Jed McCaleb is the next Peter Thiel guy running Lightyear, which I think now is called Interstellar. Brilliant, brilliant guys. Really great guys. Do you know that they bought that chain from NASDAQ for almost $500 million worth of their coins? So the other use for a profitable company to have a treasury full of a commodity coin that people have given value to as a cryptocurrency is that you can use it for acquisitions, and you can also give it out as grants for people who want to build things on top of your platform or for you or with you. And so I think between grants, acquisitions, being able to pay employees with cryptocurrency, and that's different than the securities, and then with securities, the liquidity of security, I think there's a tremendous value for a startup to get into crypto.
Okay, let's move on to a new question from the audience. Go ahead.
I have a question about accredited investors for security tokens. My clients, every single one of them, decided they were going to start out with a utility token and then pivoted midstream and now have to go down the path of pursuing a security token offering instead. Accredited investors, I don't have a sense of how big that pool is now or how fast it's growing. I wondered.
In what country?
Pardon me?
In what country?
In the United States.
So it's about 160,000 accredited investors.
That's what I thought. It's not that many people. What about other countries?
160,000 people actually invested in projects, I should say, last year. Other countries, the accreditation threshold is very low. So in Europe, it's 50,000 euros a year in income or 100,000 euros in savings. Japan has a whole different regulatory regime. As long as you have a qualified investor, you can accept retail. Korea, different. Hong Kong, different. Singapore, different. UAE, different.
Malta.
Like all these different. Well, I wouldn't mess with Malta, but that's fine. It's up to you. Every country has different rules, and so you just have to, understand what they are and stay within the kind of guide rails that you get. That's what Reg S gives you. It doesn't say you don't have to comply. It just says comply with the other countries, whatever they say.
Okay.
Yeah.
Do you, because there's such a chilling effect on it now from the SEC now wanting to reach in and really control that process? Well, I said the word chilling effect. What do the panelists think about security tokens exploding in the future in popularity? Because I'm seeing it with my clients.
Yeah, I think security tokens in that they are tokenized traditional assets. I think that is a tremendous opportunity, and I think that has had really favorable reception from the SEC. I think you've seen a lot of institutional investors that are signaling or starting to move in that direction, starting to kick the tires on different exchange platforms, different listing standards, and I think that's a really exciting thing to start seeing the real capital markets infrastructure, the real players start to get into it. The utility token space, I think that's probably as opaque as it gets. Everybody keeps coming back to the Howey test, which is definitely more art than science. I think the signaling has been favorable, but it hasn't been clearly good. But I don't think that's a bad thing. I think that shows that they're taking a measured approach. So I don't think that they're looking to come in here with I think it's going to be more of a scalpel than a hammer.
I personally would love to see a bunch of Reg A pluses get approved, but it's been years and none of them have been approved for crypto. So, I think we're all waiting for that. I don't really know what the threshold is that'll make that happen. I think Darren Marvel speaks frequently about Fatburger and it being the only Reg A plus that's gotten any real traction, and they raised 17 million, I think, online. So to expect that your company's going to go and raise 100, 200, 300 million dollars, it's going to be challenging under a Reg D, and 50 million even is tough to reach under a Reg A.
My take on it is that the utility, commodity token is,
Got you, man. We beat you down.
you beat me down.
You're
It's a
just
commodity token now.
Is it on your wallet?
It is in the wallet.
That's a new
No, we support arbitrary tokens. Whether you call it commodity utility, we can move it between ERC20 and BCH, right? So it actually is in the wallet. Fair enough. I'm plugging you. It's not just anything. But to answer your question, I think you can still do the traditional offerings, but everybody got spooked, and now they just need to be re-educated on how to do it. And then what's cool about that is if you do survive that process and you have informed investors, then you're like a guy with a somewhat liquid commodity token offering. Still, but investor, like new people that are like, hey, I'm just trying to do this business functionality. They don't have the time or where they're not crypto people, so they're not going to get in the weeds to try to figure this out. So we have to figure it out for them.
Well, it's a whole different marketing. Like, how do you reach these investors? Like, who are the broker dealers that are actually dealing with them? How do you raise the capital in the U.S.? I have no idea how anybody hears about these offerings because we can't talk about them, right? And so the only people that can do it are BDs.
PR and marketing.
Right. Yeah, they're the only guys that can do it. So it's like, how do you actually get that message out there?
Well, I think this gets really exciting when it starts to look like a traditional, you sit down with your financial advisor, he gives you that pamphlet with the clear cover, he shows you the list of all the little cryptocurrency symbols, and it just feels like he's just walking you through your risk profile and your portfolio. There's a little online portal. Once it feels like that, and I'm sure your wallet's getting to that type of UI UX, once we get there and it's just easy, there's no worrying about copying the space after your public key. Once it's just something that people are used to, I feel like that's where people start to actually get involved.
Okay, John's turn. Make it quick.
Yeah, thanks. So two things. First of all, understand that when you are talking about cheap money or expensive money, I think you guys know the difference. The public money, the going public, is the cheap money. So the expensive money are the institutions and the accredited investors that are actually knowledgeable about this. Those 180,000 investors, for instance, are going to look at something with a much sharper eye and much more attention to detail than a public offering of non-accredited investors. But the other part that I think will grow this space ultimately is that Chairman Clayton said recently that he really wants to change what is the definition of an accredited investor? Because I know lots of smart people that are very, they're not accredited,
Right.
but I also know a lot of really stupid rich people. Just because you have a spoon in your mouth doesn't mean necessarily that you are financially savvy. Just the same, if I wanted to be a chartered financial analyst, I could take the test to become that. If I wanted to become an agent to a broker-dealer, I could take a Series 63 and 79. So why couldn't I take a test to teach me about risk and let me be an accredited investor, even if I don't have any money? And when that day happens, I think that we'll see more investment.
Okay, time for two more questions. You were next, and then I'll do you. Okay.
So I wonder, in your mind, what is the next wave of physical assets that will be securitized and tokenized next? Is it going to be parking spaces? Is it going to be railway cars? Is it going to be container ship? What is it going to be?
Real estate and energy.
I think it's going to be whatever's the simplest. I don't know if it's going to be real estate. I feel like equities still has yet to take off. People are still dabbling with it. It's very simple. Everyone gets it. And that's where I would say it's probably the most logical for it to take off.
Okay, go for it, Blake.
Fractional ownership of self-driving cars.
Interesting.
I actually thought you were just making a list of the last 10 people who made an application to our site. Because there is literally everything people are trying to tokenize.
Mihal.
Yeah, my hunch is that it's
guys, can I
oil.
say real estate is beautiful because right now imagine the number one investment for people that want to preserve wealth, family offices, is real estate. Number two is energy. And it's obvious why, right? And so you have something of intrinsic value that goes up in value, you can write off on capital. Imagine a family office investment. A matriarch or patriarch passes away. You've got a $500 million skyrise in Manhattan that's now for sale. Or let's say the family wants to fractionalize some of the ownership without giving up control. Well, you could go and borrow $250 million from a bank if you had $250 million to put down. So great, you get 100,000 of your friends to put up, a couple $1,000. Now you got your $250 million, and guess what? Now you can buy that property. It's going to ROI in some given amount of time, let's say 6-7 years. And when it does, you're going to have taxable income. A family office would take a loan against that, pocket it as untaxable revenue coming in because it's a loan, let the property pay it off, or you could buy the property next door, and now the people that own those coins are actually getting either a dividend in the way of rental income, or they're getting more value from more real estate being purchased. So I think real estate is just an obvious one, and I think that would be one that institutional investors might just embrace.
Great. Mihal?
Just my thing was that we have, on our end, we have people calling us going like, how do I commoditize this gold mining future, right? So we're just getting calls about that from places. So I think like energy, as he said, is going to be a big one.
Great. Your turn.
I was just going to make a couple comments that there's 12.4 million accredited investors in the United States. So there's plenty, and you don't have to be rich to be an accredited investor. A couple makes $300,000 a year. It's actually accredited. And I was going to say that the concept of utility tokens, I don't think is going to go away. That's just the United States has a problem with that. I met with that SEC actually, and Amy Starr told me herself that utility token concept exists, and they never said that they don't exist. And there's been places, the United Kingdom Financial Services approved Anguilla's Auto Act, which made utility tokens legal in Angola. So there's a nation state in the world that is approved by the United Kingdom that utility tokens are legal. So, and then Switzerland has either securities, utilities, or currencies. So I think that it's more like the United States is going to go and finally come up with a safe harbor for utility tokens or some legislation and catch up to the rest of the world, rather than this idea that we need to go with John Gott said that the rest of the world has to catch up to us. So it's just a matter of time.
Any
If
reaction?
you want U.S. investors, everything you just said is out the window. And what I'm talking about is U.S. investors. There's 26% representing $1 trillion that want into this space. If you go with utility tokens and say things like Switzerland, I wish you luck. Okay? What I will say is that if you want U.S. investors and global investors, then stick to the SEC, CFTC, FINRA, and FinCEN, because by treaty, you're already covering the rest of the world.
Well, I have a security token offering and mine's STO.
Some woman in Belarus who doesn't have great investor protections, let's say, compared to the United States. If you held everybody that's issuing tokens to her to the same level as the United States, then not only have you already covered the low standard that Belarus put out, you've covered the whole world. So by treaty, you don't have to see where someone lives and what they do. Just hold them to the highest standard. And guys, finally, why in the world wouldn't you? They're investors. These rules are there to protect the investors.
Yeah, but there's other nations and they have other rules. So United Kingdom is not Belarus. So
wrap it up. Okay, John, we got to wrap it up.
If you hold everybody to U.S. standards, if you come to everybody in the UK as their rules and then try to sell them to the U.S., you're not going to. And go ahead, found yourself in Switzerland and try to sell to the U.S. and tell me how you feel.
The U.S. rules are the best rules.
I have a Delaware court.
Okay.
All right. Okay. So let's give the panelists a round of applause. And also let's give Memo a round of applause for doing the whole event here.
Thanks so much. That was like a really fascinating discussion. I was listening to it out in the foyer, so really appreciate everyone turning up and hearing all your viewpoints. And particularly, John, thank you so much for beaming in from Skype. Hopefully next time you'll join us live.
Well, thanks for putting up with me. All of you guys, I know I'm extremely opinionated.
Thanks so much. See you, John.